Hello, this is Chris Corbin with the University of Illinois Tax School. Today we'll be going over digital asset updates provided by the IRS, as well as the tax implications associated with them. So what we'll be covering in this video is why digital assets matter, what the definition of digital assets are, the disclosure requirements on a tax return related to digital assets, reporting income from digital assets, treatment of value decline in digital assets, as well as options for donating digital assets. So you may be wondering, why does this matter? You might be under the impression that none of your clients are involved with cryptocurrency, and why even go over this area? Well, cryptocurrency as well as digital assets in general are becoming more prevalent in today's world. More people are participating in it than ever before. And as a consequence, the IRS is more likely to double down on its efforts to identify tax returns that are not in compliance with this issue. As more people are becoming engaged in digital assets, we're also seeing businesses ramp up their activity in digital assets as well. As an example, Starbucks has a rewards program that utilizes digital assets such as NFTs, and customers are essentially exchanging and trading and otherwise holding digital assets that they might not even be aware of. So this is really an important area to discuss and to be familiar with, so that you can have conversations with your clients to see whether they are involved with digital assets, or to discuss them in general, so that way they can identify areas that, they actually might be participating in that they may have otherwise not known. So you may be asking yourself, well, what is a digital asset? The IRS recently provided some guidance on the issue by providing the following definition, where they said digital assets are any digital representation of value which is recorded on a cryptographically secured distributable ledger or any similar technology as specified by the Secretary. Well, what does this mean? That's kind of an open-ended definition here. What would help is to kind of go over some examples that they provided to further illustrate this. And one of the examples they provided of a digital asset is cryptocurrency, which is a virtual currency that can be used for payment, such as Bitcoin. Stablecoins, which is a type of cryptocurrency that is tied to another currency, commodity, or financial instrument. And another one being NFTs. That stands for non-fungible tokens, which are unique digital identifiers that are recorded in a blockchain. Think of the extreme examples of digital pictures or tweets selling for these high value dollar amounts. Those are examples of NFTs. A key takeaway of this video is, regardless of whether you are involved with digital assets or not, there is a reporting requirement on the individual tax returns that needs to be addressed regarding digital assets. This isn't necessarily anything new for 2022, as in prior tax years there have been questions asking whether you've held or been transacting in virtual currency. Well, this question has now been broadened to encompass not just digital currency, but digital assets in general, as well as provide some additional clarity on whether you should check yes to answer the question or to check no when answering the question. And the question is asking basically, did you receive, particularly as a reward, award, or payment for services, or did you sell, exchange, gift, or otherwise dispose of a digital asset in the tax year? And you can mark either yes you did or no you didn't. So when should you go ahead and mark yes? Well, if you've received digital assets as a form of payment or as a reward or an award, you should go ahead and check yes. It's pretty clear in the question in and of itself that's what you should be doing. Also, if you've disposed of a digital asset, whether you be that you sold it or you've disposed of it as a payment, or you've exchanged or traded a digital asset, you should go ahead and check yes as well. However, if you simply held a digital asset as like an investment and you didn't really partake in any purchasing or selling during the year, you can check no. You can, however, purchase digital assets with non-digital currency, like actual US dollars, for example, and you can check no as well. So now that you've fulfilled the disclosure requirement on the 1040 and are wondering now where and how do you report income related to digital assets, I'll go over some examples of digital asset activity and where you would report that on the tax return. So if an individual received payment as part of their employment in digital assets as opposed to traditional currency, those wages are reported on the 1040 just as they would be if they were paid in US dollars, for example. If the payment is for services, like as business, that income is reported in Schedule C. If digital assets are sold or exchanged or transferred, just like capital assets, that is reported on Form 8949 and Schedule D of the tax return. If there is a transfer of digital assets to an individual other than the taxpayer's spouse, depending on the amount that was transferred, there may be a gift to report on the gift tax return, which is Form 709. Looking back at the 2022 tax year, there was a trend overall that cryptocurrencies saw a significant decline in value, which had people wondering, well, if digital assets have these declines in value, is there a deduction that can be taken on a tax return? Well, the IRS has taken the stance that no, unless the digital asset was disposed of or was attempted to be abandoned, there is no deduction for a decline in a digital asset's value. As an example, they highlighted even for a cryptocurrency that was valued below 1 cent, a penny, as long as it was traded on at least one exchange, the value could possibly increase in the future, and therefore a deduction should not be taken on the tax return for a current year decline in value. So while a deduction for a decline in a digital asset's value is off the table, what about donations of digital assets? Do those qualify for a deduction? And the IRS has said yes. Donations of digital assets to a qualified charitable organization does in fact qualify for an itemized charitable contribution deduction. However, one should note that if digital assets that exceed $5,000 are donated, a qualified appraisal must be submitted with the tax return in order to support the deduction. And if cryptocurrency, for example, was donated and that cryptocurrency is over $5,000, you still need a qualified appraisal. You are not allowed to simply use the value that is listed on the exchange on the date that the donation was made. So that's an area to kind of keep aware of, as that might be an easier way to assess the value, but an appraisal is still needed. This is an area that's going to be likely discussed not only in Congress but among practitioners as well, because appraisals for these digital assets are likely going to be complex. Thinking about NFTs in particular, where they are by nature unique, it's going to be somewhat difficult, I think, to assign a value on an NFT, and this is going to be an area that is going to likely see some more attention paid to and hopefully more guidance provided. Here are links to some resources for additional tax research. As this is an emerging area in taxation as well as in accounting in general, it'll be important to keep on top of this information and follow developments as they occur so that you can help assist your clients in learning about digital assets, helping them understand what they are, seeing if they have any interest in participating in digital asset activity, and explaining any tax ramifications of participating in that activity. Hopefully this information that we covered today will be helpful and provide some further clarification on this new emerging topic. And thank you very much for listening.